All right. So let's get into it. All right. So property, plant, and equipment. So now let's get into this. So IAS 16, property, plant, and equipment. Plant and equipment. Yeah, let's start. So let's talk about the property, plant, and equipment and what is it. So don't forget that in your asset, right? You know there are two types of assets. Are you with me? Your
Yes.
assets. So this is going to form some foundation to what I'm going to be teaching you, right? So please just bear with me. So yeah, you have no, this is not what I want. Okay. So yeah, you have your asset, right? So one leg of your assets, are you with me?
Yes, we are
Yes,
with
we are.
you.
Okay. Your assets has two legs. By two legs, I mean that it is either it is tangible asset it is intangible asset. Or intangible asset. Now, under this, right? So don't forget we said that your assets can either be tangible assets or intangible assets, right? Now, your tangible assets is divided into two, right? Your tangible assets can either be, obviously, I'm not looking at it from the perspective of whether it is current or non-current. Your asset can either be current or non-current, monetary or non-monetary. But that's not the lens from which I'm looking at it. I'm looking at it by nature. So your asset is either going to be by either it is going to be investment properties, or again, I'm not looking, there are still other types of assets, but I'm just looking at it from the general overview of it. Or it is property, plant, and equipment. This one, right, is we are going to be applying IAS 38 for this. This is IAS 16, right? That's the standard that deals with property, plant, and equipment. Oh, sorry, beg your pardon. I'm not sure I've shared the link with people for YouTube. I knew it that a lot of calls will come in. Sorry, just a minute. Just a minute, please. Hold on. I just needed to attempt to YouTube. All right. So as I was saying, IAS 16 or IAS. So I believe, sorry, just a minute. Let me be sure that those on YouTube are following you, so that I don't have to repeat myself again. Right. So IAS first, are you with me? So now let's now start. This investment property, right, is, can you still hear me? I'm just looking for ways. Hello, please confirm that you can
Loud
hear
and
me.
clear, sir.
I can hear you.
Okay.
Yeah, go ahead, sir.
So now I've given you a background to all what the standard is or what asset is. So don't forget, we said that your asset can either be tangible or intangible. If it is tangible, then it means you can hold your, and it can come in form of investment property or property, plant and equipment, right? We typically would refer to investment properties. I will still deal with that in my next class. But we'll typically talk about investment property, the standard is IAS 40, as properties held. That's by property now I'm referring to land, building, parts of a land, or both, right? Held for capital appreciation,
Is it just me? I can't see his screen. I can't hear
I
his
can't
voice
see the
anymore.
Me
screen.
too. Me too.
See the
I
screen
can't
either.
hear him. Probably
I
the
think
network is up.
the NTA network is bad.
It seems he stopped sharing his screen.
The network is extremely bad. No. The network is bad. Generally.
Stop the call.
He's no longer in this call.
This network, oh, please now. Please now. Ah, God. Deliver me this time around.
Please, can you see me?
Please, no. I'm
Yes.
not seeing anything. No.
But your screen is not on.
I live in a part of the world where I have to keep saying, can you still hear me every 2 minutes, so that I'll be sure that I'm still following. Thank God I shouted, can you see him? I would have talked like generator. Yeah, MTN and Intel is bad. Unfortunately, those are the two networks that I use. Unfortunately for me. So, are we getting to an extent?
Yes, we are with you. Yeah, we are with you.
So when we talk about investment properties, basically, we are then referring to assets held for administrative purposes, right? Assets held for administrative purposes. So now let me just do this printer for us, right? So if I have a property, right? Let's say I have a 2-story building that has 3 floors. I use my first floor building, I use my second floor for rental income, and I use my 3rd floor for rental income. So can somebody tell me how I'm going to classify?
Again, sir.
So I have a 3-story building, right? First floor, the ground floor is for business. The first floor is for rent. The second floor is also for rent. So tell me how I'm going to classify the asset.
The first
Okay.
the PPE.
The ground floor is PPE, right?
The second and third investment properties.
Investment properties. Scope of the standard. So what is the coverage of this standard, right? The first thing is the standard covers all tangible assets that are owner occupied, right? So it covers all assets, right? Except for those that are covered by other standards. So it covers all.
So we can see your screen now.
Is that general?
We can see it. It's a network.
No,
No,
we can see your
it's general. We can't see.
We can see it's a network.
If you cannot see, you can log out.
Your screen is visible.
It's
network.
No, we can see your screen very clearly.
The screen is visible.
If it is very clear, then just log out and log in again. Not a problem. Just log out and try and log in again.
Your screen is very, very clear. It's clear.
Okay. So it covers all owner occupied properties. Don't forget, we said owner occupied properties in this context will be properties held for administrative purposes and business purposes, right? Except those that are specifically covered by other standards, except for the following, because they are covered by specific standards, right? So number 1, we have assets held for sale and discontinued operations. But again, we are looking at asset held for sales basically, and that standard is IFRS 5.
It's good.
Please mute your mic so that we'll be able to clear. Hello, please mute your mic. I don't want to mute everybody so that I can get reactions. But again, please mute your mic if you're not speaking to me. Please,
Hello, sir. Only mute everybody from your hand. Mute everybody from your hand. So that we can hear this class, please.
I don't want to mute everybody because of my network, so that I'll be able to hear that I can hear everybody. But I believe we are all adults, and I don't want to be honest, after this one, if I hear any sound, any uncalled for sound from anybody, I will likely have to remove you from the call. I won't be able to see your reactions. I won't be able to see it because my screen is going to be covering it. That's just the issue. It's because of my network, basically. So I'll know when you are speaking or not. So number 2 standard is biological assets, related and that's IAS 41.
IAS
Right.
40, sir. IAS 40.
It's 41. Biological assets is IAS 41. Investment properties are IAS 40.
Yes, sir. You are saying that, okay, biological, okay, that is agricultural. Okay.
Yes.
Thank you, sir.
You're welcome. Exploration and evaluation assets, that's used in the case of oil and gas, and that is in accordance with IFRS 6. Right. And then some mineral rights and mineral resources. You may find some of them under the scope of IFRS 6, right? And similar non-generative resources. All right, so that's that about that. So again, don't forget that the standard is specific to only owner-occupied properties, right? So it does not apply to investment properties, right? It does not apply to investment properties, especially when the investment property is held under fair value model. I will explain that again in the next couple of minutes. It does not apply to investment property when the investment property is held under fair value model. But if an investment property is held under cost model, right? You understand what cost model is, fair value model, and evaluation model in the next couple of minutes. But if it is held under cost model, the cost model under IAS 16 is the same as cost model under IAS 40, right? So in a way, they look alike, right? But that does not mean that we should always refer investment property as owner-occupied properties. Does it make sense to you? Do you understand what I'm trying to say there? That investment properties under cost model, the cost model is the same thing for both PPE and investment property. But fair value model is different from revaluation model in a way, right? So because the cost model is the same, when an investment property is held under cost model, we can use cost model, right? Now, having said that, this investment property, this property, plant and equipment recognition criteria. Please, can you still hear me?
Yes, I can hear you very well.
Yes.
An item shall be recognized as PPE, or let me use an asset, sorry. Asset item looks very minute. Shall be recognized as PPE if and only if. We will be hearing a lot of these in the next couple of weeks or months before you start doing your standard and before you start doing your group. 1, it is probable that future economic benefit associated So the asset will flow to the entity. Number two is that the cost of the asset can be reliably measured. Right. Those are the two things that has to be fulfilled before you can recognize an asset, right? But again, there's this class of assets, right? Are you with me? These two, let me be sure. Okay, these two things must be fulfilled for you to recognize an item as PPE. But there's this class of assets we refer to as complex assets, right? And that's a little bit peculiar to your level, basically. What are complex assets? So I'll give an example of complex assets. You have an aircraft, for instance, right? So the body from the engine, right? Although they all function together, but it's possible that the engine has a different lifespan than the body itself, right? So because of that, we call that complex asset, because a portion of the asset, a complex asset, is that property, plant, and equipment.
I can't hear you.
Hello, sir. We can't hear you. Or am I the only one?
His network is bad. I'm
We
sure
are
it's
not the only one. I'm also included.
Don't worry, his network is bad. Yeah, if he can maybe move location, it might be better. The listeners, his network has pushed him out also. Also, now that we're even 100, how is he going to come back inside?
I wish he could just send us a message on WhatsApp. Let's know what's going on.
Exactly. Like if their network is out, they should just drop a message on WhatsApp. But you might still be trying to get back on that one. You can talk now. The man is not teaching.
Sorry, please. I joined late. What topic are we discussing tonight, please?
IAS system, PPE.
Okay, thank you very much.
Okay. Yes, WhatsApp network is not the same as meeting network. Of course, WhatsApp message will deliver faster than meeting would. I'll be dropping.
You don't even know if he has a problem.
No, as long as network is not totally out, it would still deliver. Meanwhile, I'll be dropping the study group link via the chat.
Hello, can you hear me?
Yes, we can hear you now.
Okay, thank you. All right. So, do you get what I'm trying to talk about here? Yeah. What was that?
Complex assets.
So I was explaining complex assets and saying that assets are just
It's still breaking up like very well.
be decomposed. I think that's the best word. So now, what has different categories, right? And those categories can be differentiated based on their useful life. So we have an aircraft, for instance. The body has a useful life of 20 years. The engine has a useful life of 10 years, right? So that becomes a complex asset because it will be wrong for us to now put all of them together, right? And then just compute all of them all together as an asset, right? But by the way, I'm still going to come back to what is so or what is why is
Sorry
it
to
complex at
interrupt
that?
you, sir.
So let's
Sorry
start
to
with
interrupt you,
initial
sir. You were
recognition.
locked out at a point. You were locked out at a point. You were locked out at a point. I don't know why nobody is saying this. Are you aware?
Yes, he knows.
Yes.
He knows now. So
That's
he came
what
back.
I was saying during before I was locked out. That's why
Okay.
I had to reach
Okay.
the point.
Apologies, please.
Do you get it? No problem. Now we have initial recognition.
Yes, sir. Yes, sir.
Recognition. An asset.
The screen is not showing.
His screen is showing. Is your network?
P, right? An item of PPE commission there is including commissioning that the commissioning cost and dismantling cost is a cost that should be recognized in the future, right? But again, we are looking at it from the perspective of that if you are going to incur the cost, what's the present value of the future amount you're going to incur, right? So the difference, right, will come and be added to unwinding cost. I believe I will have an illustration that may explain that in details, right? Don't forget that you must always recognize an asset at cost, and the cost is all costs incurred to bring the asset to its intended use. So say for instance, are you with me, please?
We are with you.
Yes.
All right.
Yes.
Yeah. So say for instance now, if you buy a motor vehicle, for instance, so say you bought it 12 million naira from say US, right? Shipping fee is say 10 million, right? And million naira. Yeah. So say 1 million naira, right? So now it means that the total cost will be incurred. But again, I want you to cast your mind back to relevant costing, because relevant costing is a little bit useful here. It's one thing that helped me learn it very quickly. Now, there are some costs that are not traceable to the asset. Say, for instance, you already have a staff, right? You already have a staff member, and if you had not bought the asset, the staff member you would have paid the staff member all the same. So say training and all of that, they do not form part of the cost of the asset. Does it make sense to you? They do not form part of the cost of the asset. Now, but again, don't forget that the cost of an asset is all cost incurred to bring the asset to its intended use, including the commissioning and dismantling cost, right? So let's go to subsequent measurement. Subsequent measurement, or what we call subsequent recognition. So you are permitted to use any of this model, either the cost model. And when you are using the cost model, are you with me?
Yes, sir.
Yes.
When you're using the cost model,
Yes, sir.
the asset is recognized at cost less accumulated depreciation less impairment loss, if any. All right. The asset is recognized at cost less accumulated depreciation less impairment loss, if any. It is that simple, right? For cost model. For evaluation model, don't forget that I said the cost model is the same under the IAS 40 and IAS 16, but evaluation model is a bit different from fair value model, right? So for the evaluation model, they carry the assets is recognized at revalued amount. It is recognized at revalued amount, and the revalued amount is fair value. So let me just put in brackets the fair value. That's the valued amount, right? So it's recognized at fair value, right? Are you with me? Less subsequent accumulated depreciation. Now, emphasis on the word subsequent. not so depreciation is not read backward, it's not recognized backward, it's recognized forward for the evaluation model. Then less impairment loss, if any, and also the impairment loss to subsequent impairment loss, not impairment loss that were earlier recognized. Right? Are you with me?
Yes, so. Yes, so.
Now, but there are some rules that guides this evaluation model. There are some rules that guide it. Number one is that once you've adopted revaluation model, you should always revalue the assets periodically, right? So the revaluation should be done periodically. Once the revaluation model is adopted, the standard prescribes that revaluation is conducted periodically, right? So that the carrying amount of the assets will not be materially different from the fair value at a measurement date. By measurement date, I mean by statement of financial position date. Don't worry, sorry, I'm likely going to become an old accountant, and I wanted to say balance sheet date, but again, it's still the same thing anyway. It's just change of naming. They just did naming ceremony, and they just changed it, right? Now, in the case of complex assets, I hope you understand what complex assets is now. Hello, can you hear me?
Yes, sir. We can hear you.
Yes, we can hear you.
Yes, sir. We can hear you.
The entire class which the assets belong to must be revalued or should be revalued once an asset in that class is revalued. Does it make sense to you?
Can you please recap, sir?
So what I'm saying is this. So in the case of where an asset belongs to a class of assets, right? Where an asset belongs to a class of assets, right? Then the entire asset in the class should be revalued once the evaluation model is adopted. But that is most especially in the case of what's the name, in the case of complex assets. So we are saying that in the case of the complex assets, if you've adopted evaluation model for the engine, it is better you adopt evaluation model for the total asset within the same class. Does it make sense to you?
Yes, it makes sense.
All right. So now let's now look at one thing that we want to look at, and that is depreciation. The standard prescribes that there should be systematic allocation. So depreciation is the systematic allocation. I know you know this, Abi, of the cost of the assets over the estimated useful life of the asset. That's what depreciation is, right? But again, that systematic allocation is a little bit subjective because of the provisions of IAS Is it 10 now or 8? We used to mix it up. Now, there's accounting estimates, accounting policy estimates and error. Right. So the systematic allocation of the cost over the estimated useful life. So an entity can decide to use either a straight line method, 2, reducing balance method, sum of the year digits, or even output basis. But output basis is usually used for
Hello, sir. Please, I can't see your screen.
it could be the network. So now let me explain each of them. Can you see my screen, please? Can anybody else see my screen?
Yes, yes, we can see it now. Yes, we can see it now.
Okay. So now let me mute your mics. I think somebody's
Everybody, please.
It's Abiodun.
All right. So straight line, right? What is straight line saying? Straight line is saying the cost of the asset is 10 million naira, for instance, and we hope that we are going to use it for 4 years. Straight line method is saying do 10 million divided by 4 and let everybody rest. Do you understand? So the cost of the asset is allocated on a straight line, or is allocated at the same way across the years. Does it make sense? That is what some of the year digits is saying. That's so let us assume that we have 10,000 or 10 million naira for 4 years, spread it evenly across the years. While this, so let me just say for straight line method, it is cost minus the residual value right, or divided by the estimated useful life. What is reducing balance saying? Reducing balance is saying your carrying amount of the assets divided by the remaining. Now you will notice my choice of words. For the first one I said estimated useful life, while for this other one I said remaining useful life. Do you understand? So now if an asset is supposed to use 10 years, for instance, for the first year the remaining useful life is 10. For the second year the remaining useful life is 9. For the third year the remaining useful life is what? Talk to me now.
88 years.
Yes, so that's reducing balance. Because in the exam, if PP is going to come out in your exam, you will see that the examiner will be playing with words here. So you have to take note of whether you're using straight line method. Please, can you still hear me?
Yes.
Loud and clear.
We cannot see your screen.
Can you see my screen?
Yes.
So what is some of the edges is saying? Some of the edges, I still do not find any sense in it, but I mean, I will still, some archaic people still use it. Sorry to use the word archaic, but I still do not find any sense in it, to be honest. So say, for instance, an asset is supposed to use 4 years, for instance. So we are going to do 1, 2, 3, 4, 5, 4 years, for instance. So what's the total number of, if you add everything together, what do we have?
That's 10.
That's 10, Abi. So in the first year now, you will now do the cost, right, minus the residual value. Divided by.
Hello, sir. We're not going to start on the ascending order. No, sorry, descending order. We're not going to be on a descending order basis. Is it not going to be on a descending order basis from 4? That we start from 4 to
yes.
3,
Yes. So we now do times over 10.
Okay.
Do you understand? You know what I'm saying?
Yeah, I do. Yes, I do.
Yeah. So times here 4 over 10. This is the, I do not see any scientific justification as I've been trying to say it. I've not seen any scientific justification for it, but then, so for the second year, you now do times 3 over 10. Sorry. Then the third year, you will do times, same thing, but this time 2 over 10. And this
cost in each of the cases, I mean.
Yes. 1 over 10. Do you understand? But again, it's not widely accepted because there's no, I do not think there is any justification for it. But this is what it's typically. Now, that's about some of the year digits. So now let me quickly look at output basis. The output base is usually used for manufacturing plants where we can estimate that a plant can produce an XYZ amount of units. So say for instance, we have we just got a plant, right? And the plant is supposed to use is supposed to give us 50,000 units, right, automatically. So in year 1, we're only able to produce 10,000 units. So it means that for year 1, you will have your cost, right, minus the residual value. Are you with me? Times 10,000 divided by 50,000. Do you understand?
Please explain that. I can't see your screen here.
You can't see my screen. What I'm saying is solving please rest.
Amy, you're not muted.
Can you guys mute yourself? Eh?
Don't worry. We'll mute her now. All right. Does it make sense? So we are saying that, don't forget the example, don't forget where I started from, that we believe that the asset is supposed to give us 10,000 units. It's supposed to give us 50,000 units in total. And then we are only producing 10,000 in the first year. So we can just do 10,000 divided by 50,000. Do you understand? Does it make sense to you? So it means the second year, we're able to produce 20,000. Then we will say the same method, costs, but this time around will be multiplied, will be 20 divided by 50. Don't forget that we have anticipated that it is going to be 50 units, 50,000 units is going to produce. So what we are doing is that we are allocating the cost. Don't forget that depreciation in reality is allocating the cost over more systematically over the estimated useful life of the asset. But the output basis is just saying that don't let us assume the useful life. Let us assume it based on, since we can predetermine the amount that of units this thing can produce, let's do it based on the number of units this can produce. Right? Does it make sense?
Yes, sir. Yes, sir.
Hello, sir. I understand you, but I didn't get the second year, please.
So we are saying that if year 2, for instance, we have 20,000 units. So it means in year 2 is going to be cost, right, minus the residual amount value times 20,000 divided by 50,000. Does it make sense to you?
Yes, please. Thank you.
You're welcome. So do you understand where we started from? Do you understand it to this extent? Well, we've not done much today, but do you understand everything we've discussed so far?
Hello, sir.
Yes, I'm with you.
Yeah, please. Are you saying in place of the useful life, so we are using the output in place of the useful life? Since
correct. Correct. That's it. That is it. But don't forget where we started from. It is only used in the case of asset that we can produce and predetermine the estimated output of the asset, right? So we hope that it will give us 50,000 units, right? But in the first year, we've only been able to get 10,000 of it. So we're only doing 1/5, basically. Does it make sense? But it is only in the case where we can predetermine the number of units that asset can produce, right? Or we can get from the total number of assets. Okay, so it's only asking that, are we using output instead of useful life? And I said yes. All right, so you will notice that the examiner will be playing with some of these words. So in my next class, what I want to do, time will not permit me, but in my next class now, I will try as much as possible to start early. Possibly I will start earlier than 7. If I'm able to start earlier than 7, I will communicate to you before 4. Please, Folashade. Folashade is my is my friend, right? Folashade Abat.
Yes, sir.
Yeah. So you can always remind me that I have a class with you so that they can tell you if it will be 6 or 7 next class. But again, I want to solve one more. I want to solve 2 or 3 questions on this before moving to IAS 40. So let me give you my course outline before. Let me just give you my course outline. That works? Or you don't need it?
We need it, please.
Yeah, so I'm treating with you.
We need it.
IAS 16. I'm doing IAS 40, IAS I think that's right. IAS 38. So this is PPE. This is investment property. This is agriculture. This is income tax.
We can't see your screen, sir.
Income. Sorry, this is impairment loss. This is earnings per share. This is intangible assets. I will be doing IFRS 5, assets held for sale and discontinued operations. I'll be doing, are you with me? Why did I forget to
Yes.
send that? So we no, I cannot. So I'll be doing S1. I have S1 and S2. All right, so that is so if time permits again, we will then pick up from here and then continue. Does it make sense to you? But let's deal with this 9 to 10 standards for a start. Does it make sense?
Yes.
Yeah. Let's start with this for a start. So I will communicate this to Mr. Taufik, the lead lecturer for the course, so that we can keep up. So please, my time with you is always on Friday from 7 to what's the time now? To 9. Right? So, but I would like to always start before 7. In the case where I'll be starting before 7, I will communicate the timing with you. All right. Hopefully network does not disappoint me again, just like it did today. But did you get anything from today's class? Okay, yeah, that reminds me.
Yes. I got something from it.
That's 23. Do you have any question for me, please? Do you have any question for me? Yeah.
Yes, sir. Please, sir, I want to confirm if the note will be uploaded to our WhatsApp platform.
Yeah, sure.
All
The
right,
note is for you. I don't have anything to do with the note. So, what other discussion? Do you have any question for me? But in the next class, I will be coming up with many practice questions for us to work with. Does that work?
Yes.
All right. Thank you very much.
Yes, it works.
But the idea tonight is just to make sure I build a background for the course, which I think I have, for the topic, which I think I've done successfully. All right. See you again next week. Do enjoy the rest of your night. Bye.
Bye.
Thank you. Good night.
Thank you.
Thank you.
Good night.
Thank you, sir. Good night.
Yeah, good night.
Thank you, sir.
Wow. Thank you. Good night.
Yeah, good night. Hello, Chief. And
Hello, please, for us that joined late, can you help us snap your notes, your jottings?
We will send you the link.
The network has been poor.
But you can watch it later with the link. And he said he's going to send the material, I think.
Thank you.